Today, XRP slides from last week's SEC-driven highs. But Ripple thinks banks could adopt the token after the firm's victory in court. And Kevin Dinino of KCD PR breaks down how crypto companies are working to set themselves apart from the projects that failed in 2022. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies trading mostly flat through the weekend and into the new week. Bitcoin hovering right around $30,000, while Ether traded at $1,900. XRP, meanwhile, giving back gains as investors took profits from the huge rally last week, fueled by Ripple's victory in court. That token fell to around 74 cents. Okay, let's talk about the top stories. XRP might be coming down from its recent highs, but Ripple thinks the token has a bright future with banks. In an interview with CNBC, General Counsel Stu Alderati said Ripple expects to start talks with U.S. financial institutions about using its on-demand liquidity product, which lets companies use XRP for money transfers. Alderati told CNBC, quote, "We're hopeful that this decision would give financial institution customers or potential customers comfort to at least come in and start having the conversation." The renewed hope around TradFi partnerships comes after that ruling last week, which said that, at least in some cases, XRP does not operate as a security. Next, Binance is of course facing its own legal battle, and a current employee tells CNBC the company could lay off thousands as the Justice Department's probe moves ahead. The Wall Street Journal reported that the company laid off 1,000 workers earlier this year, and the source told CNBC it could raise that number to between 1,500 and 3,000 workers in total. In response to those claims, a Binance spokesperson disputed that the cuts would affect 3,000 employees. They said the high-end number was just not right. They also said the company was reevaluating whether it has the right talent and expertise in critical roles rather than right-sizing. Now, just recently, Binance also faced a number of high-profile departures, including its chief strategy and business officers. Last, Coinbase is yet another crypto company facing scrutiny by federal regulators, but that hasn't stopped the firm's stock from rocketing roughly 200% this year. Now, Cathie Wood's ARK Invest, a huge backer of the stock, is cashing in by selling roughly 500,000 shares on Friday, worth about $50 million. It's the second time the firm's sold off some of its holding in Coinbase, having sold $12 million worth just 3 days earlier. Now, what's driving Coinbase's recent gains? Well, in part, it's surveillance sharing agreements with companies filing for spot Bitcoin ETFs, and some hope that Ripple's seeming victory in the XRP case could boost Coinbase's own chance of victory in its own legal battle with the SEC. All right, on to our main story. Even with companies like Coinbase seeing renewed investor interest and Bitcoin hovering in the $30,000 range, interest in crypto remains way down after 2022's implosion. So how are companies trying to set themselves apart and make their case to customers? Well, Crypto World's Tanea McKeel asked Kevin Dinino of KCD PR to break it down.
Let's start by having you set the landscape for us. What is it like for crypto businesses right now that are trying to pitch themselves, especially in the US? And as I was just saying to you before, we're a few months removed from the collapse of FTX and, similar bankruptcies, not just, within crypto, but we have a whole new batch of uncertainties, regulation, and so forth. How hard is it for crypto companies to make their case at a time like this?
I mean, there's obviously a lot going on in the space, clearly, whether it's regulation. We have all sorts of issues going on with the SEC currently right now as well, but it's really a back to basics time for crypto firms in general. What we're seeing at KCD PR is exactly that. It's a return to talking through use cases, proper messaging, and making sure that the consumer understands, in many cases, both the risks, but it can also message on the appropriate way a firm should be talking in general when it's reaching its audience and the general markets as well. Markets love assurances of safety and security. And so in many cases where firms can do that and go back to basics, that is going to play going forward.
What about for your business specifically from a crypto focus? Have you seen a slowdown in clients or a change in the types of crypto clients that are coming to you?
I mean, in order to work in this business, you have to deal with ups and downs. So it's very much volatile. And it has been, I would say, for the last 4 or 5 years in terms of working in this field as well. I think this last down cycle or crypto winter, we're now starting to see coming out of that where firms that we're working with are very much focused on how to properly message use cases and its viability going forward as well. So whether that's seeking funding opportunities from investors or how to reach a new slate of consumers, there's still huge interest in this space. particularly on the institutional and business side, as well as some of the service businesses as well that work within crypto, whether it's custody, different protocols coming out, et cetera. There still very much is a lot of activity. And we'll see ups and downs. And I think right now we're probably coming out, hopefully, of a down cycle in that capacity as well.
Where would you say, crypto has broken out into these different sectors? It's no longer just Bitcoin and Ether, and watch the price move up and down. So there are all of these specific pockets of the crypto market, and then all of these different businesses that are there to service them regardless. I think about like the unbundling and the rebundling of fintech, and seeing that kind of come to crypto right now. But I'm just curious, are there specific parts of the market where you're seeing the most interest from clients? Is it a specific business case? Is it a particular type of asset class? What are you seeing?
I think on the side of crypto in general, blockchain and Web3, crypto is just a small piece of sort of the financial intersection of how blockchain technology can be utilized. And so we're definitely seeing blockchain cases coming out, whether it's smart contracts plays, and on the service side of the business. So entities that are working with digital assets, how can they account for them, for example? Are there compliance issues that they need to run through? From a payment standpoint, if we're providing crypto payments on the fintech side, all of these service niches within the broader sort of Web3 blockchain ecosystem, we're still very much early days in this whole ecosystem. And I think that's important to remember. While we might be in a down cycle now, 2-3 years ago, there was an up cycle. And so I think that's the biggest noticeable shift, is very much, I know I talked through sort of this return to basics, but really making sure that we're messaging and reaching the right audience and understanding that. Whereas in the past, I think a lot of crypto companies went for that mass market appeal, whether it was sponsoring a World Cup opportunity or bringing in that A-list celebrity and paying millions of dollars. Those days are likely over. And that's what we're seeing, is very much more of a grassroots community play to showcase what their vision is, and really in many ways transferring that into a voice in the market.
You said that there is still interest, and there is this focus on going back to basics, and trying not to repeat the mistakes of the past. Have you seen many people get out of the business altogether? What's sort of the ratio of people who are still in it versus those who have given it up and said it's not for us?
I think that like any market, there's going to be business failures and various examples of that. So yeah, absolutely. There have been some folks that have left the business, et cetera, or things have winded down as well. So to that capacity, I think you're going to see people leaving. But on the flip side, we're seeing companies coming to us with new ideas, new concepts in terms of how blockchain technology is out there, and really kind of taking advantage of that as well.
When you're working with these companies, how optimistic are they about the future or about what they're pitching? And perhaps at the same time, how open are they about the challenges that they're having to face?
I mean, I think now, just purely from a news cycle standpoint, they understand a lot of the challenges that are out there and potential pitfalls. But by working with a comms agency like ours, a lot of what we're working through is really targeting what those pain points can be or will be, whether it's reputational risk, and really just simplifying messaging. We had a client where we talked through just the whole topic of NFTs and an NFT marketplace. And the conversation was, man, what if NFTs really came out initially being branded as digital collectibles instead of non-fungible tokens? What a difference that would be in terms of understanding a product as well. And I keep harping on this back to basics, but that's a big part of it too, is really getting back to getting rid of the jargon and just focusing on what you do well. Are you solving a pain point? And if you're not, then that's probably a business use case issue as well. And that's why you're seeing maybe companies that are folding or having issues, because they can't solve that.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.